All right, guys. I've got a new little webinar slash recording, kind of a thing that Erwin and I are putting together to introduce Algo Studio Pro to some of you that may just be getting wind of it or have taken a look at it or unsure. So we wanted to kind of bring you up to date on where we are in its development as Erwin does continue to add features to it. And for some of you that haven't seen it before or have just had a glance at it, maybe dig in a little bit more, show you some of the things that people are doing. Of course, if you're in our Discord, you see lots of people experimenting and using all sorts of different kinds of techniques to build their algos. But we wanted to just kind of do a quick basic overview again, and then demonstrate a few algos that are very, very simple. And as you've heard me say this in many videos, it's usually the simple algos that give you the best results. So while it's tempting to really dig in and get, ultra technical on this and that, often you'll find that the simpler algos will give you the better results. So don't think that with complexity comes increased profitability. It's usually the opposite of that. And I think most system traders or algo traders would give you a similar analysis of it. But I don't want to discourage those of you that really like to dig in and get into the great detail. But what we're going to look at today will be relatively simple because we want to encourage you that you don't have to be a PhD in software engineering to develop a profitable algo. So I have right in front of us here, this is a very, very simple algo that anyone could look at. You probably have done something like this yourself in the past, where you're just looking at a simple indicator. And in this case, we're just using some moving averages, right? This is rudimentary an approach to trading as you might find anywhere, right? So we're using I've got a 20 and a 50 EMA and then a stochastic. Actually, it was Erwin, right, that built this, right? Sent it over to me. Said, look how well this does with such a profitable or such a basic foundation. Excuse me. Now, as you see it on the screen here, when you're developing an algo like this, I think it's important to start with the indicators on the screen. Although I'm going to mention to you here, you do not need to have all of these on the screen. If you can design the algo itself and then just look at the price action, knowing that if it trigger here, it's odd that we don't have any trades today, but we just don't. So you look here. So the trades are going to fire whether or not you're looking at these or not. But when you're first working with an algo, I think probably better for your own understanding and insight and conviction that okay, it's doing as I've instructed it to do, and you'll see some of these results. And then when you see the screen blacked out like this is the time we're telling it not to trade. So I have it set right now just to RTH hours. So from bell to bell, if you were trading it on this day, well, you can see your results. And now here I've got, this is, I think, 20 days of data. And if we take the same algo and look at its results, well, okay, a little drawdown early on, but over time, right, you see it pretty nice result going from bottom left to top right, which is just what you hope to see. And what you really want to try and avoid when you're building an algo, you don't want to see big drawdowns like this, where even though you might get to a good result, that drawdown can be problematic. And we know that many, probably the majority of people that might be applying this are likely working with prop accounts because that's just dominates the futures trading markets here in 2024. I mean, it has been for the last couple of years. It's so prevalent that we want to include some of those built-in safeguards for those of you that are trading prop accounts. And in fact, I have a couple built in here where you can manage the drawdown, because that's what you're managing with a prop account, is to make sure you don't have blowout drawdowns. So let's open it up very quickly. Again, super simple here. I'm just going to, I've already got it open here. So just to go over with people, just to show you how easy it is to design an algo like this. So here you're seeing it as in the default layout where it'll come up in the graphic designer here. Now, some people like this, some people prefer it. I find I'm just faster at doing it over here with the logic where I can just quickly type it in. So many of you will have seen this before, so bear with us here as we just go over some rudimentary things. But you can see the algo that I've designed here. So let's just quickly review this because it's so damn simple. So all we're doing is to use a stochastic case. So now if I wanted to see what was in here, I'm like, oh God, what did I put in this thing? Now I can just come over here and I get a long and short box here. So one is just going to be the mirror image of the other. Now, there are times when you may not want the mirror image, right? So crosses above, crosses below, this makes sense here, but that's not always the case. So it's the kind of thing you got to double check. Is that what I want? But for our purposes here, it's relatively simple. So if I wanted to just look at, well, okay, what am I doing? Well, here you can see once I click this, I've got every indicator that's available to on my Ninja here, everything that's available to me, and all of the parameters that are available to either be used, tested, or optimized. Now, this is likely this is an optimized result to have a 210.3. That's not a common setting, but the algo likely optimized it and found that that was profitable for this algo. So we can just look at that and you see what we're doing here. And all we're doing is saying, okay, when K is greater than 20, as you see it here, when K is greater than 20, we want to take that trade. So when the price bar closes greater, excuse me, let me get on the stochastic K, less than or equal a fixed length of 20. Again, you can see that the 20 and 80 is marked here. So we're just doing something that you would normally, if you were applying a stochastic, you might be paying attention when it gets under 20. Well, that's all we're doing. It's saying, okay, when it gets under 20, well, let's pay attention for potential entry as long as it's in conjunction with the other conditions that we've added here. Now, if I was starting from scratch, I would just add a condition here if you assume this was my first condition. Now, once I add something here, now I've got all of these choices available to us. I don't know if I can pull this over, open this up a little bit. Well, the first thing I have to look at is, okay, what am I asking it to do? Are we doing something that's based on price, volume, time, the day of the week, a swing low, swing high? Am I working towards some sort of a retracement level? Am I looking at a trade variable, as in I want to be sure that a trade never gets below that if I show this because this is particularly good for profit counts. The daily P&L, I want to be sure that that is never less than minus 500. So as long as it's trades above 500, if I wanted to add that, as long as it's doing that, okay, keep trading. If it gets to a minus $500 drawdown, stop trading. Right. I just take a minute to focus on that because it's so valuable for profit counts. Now here, if I wanted to go to a new condition, and maybe I wanted to add whatever, right, a MACD or anything, right? Pick your indicator. Maybe I want to add, a stochastic RSI. Okay, well, 14 period, is that what I want, a 14 period? Maybe I want to add it and then run the optimizer on the indicators and see if I can get a better result by optimizing that reading. I'm going to take that off because that's a little wacky. But the point being, it's very, very simple. It takes a little time. You got to work with it a bit and say, okay, what am I doing here? Do I want price? Is it the price that I want, or is it a swing low? Perhaps I wanted something that was price action based, so I make a point of showing you that because I don't want you to think that it's just indicator based. It can be price action based. It can be indicator based. It can be a combination of price action, indicators, moving averages, whatever the case may be. You have a tremendous amount of flexibility in terms of what you're telling it you want it to do. Retracement. Okay, do I want to, of course, we talk a lot about a 50 to a 618, 65 retracement. Maybe that's something we want to look at. Do I want to look at the current bar's retracement at 50% on a swing strength of 20 and a minimum range of 32 ticks? That's the kind of precision that's available to you. And of course, you could start there, load that up and say, okay, well, let's go back 2 weeks and optimize that indicator and see if that's the best reading for it. Now, you got to be careful with optimization because if you're optimizing once, likely you're going to need to optimize again. So you need to kind of monitor your results because as the volatility changes, obviously we're in very high volatility right now, that might require you revisit your optimizer to accommodate the current increase or decrease in volatility. So optimization it's a slippery slope, right? You want to be careful of over optimizing. And I think it's just a personal preference as to how much you want to rely on the optimization. I often will start with something that I know that I've traded for many years and start with that and say, okay, well, if I'm using this, do I want to trade this bell to bell? That's another important question. So by the time you get over to your ATM, you got to think about it and say, do I want to go bell to bell? Is that what I'm really after, is a bell to bell result? Well, if we look here, you say, well, why would I not want to do that? I mean, that might be your conclusion. Okay, I'm going from bell to bell. Pretty good result. Well, if I had a particularly bad day, then I might, reflect on this. Or if I had a choppier result, just so happens here over this 14 period, I've got just a spectacular result. Well, if I did that over 200 days, I may not have that same smooth line. So I might want to be more specific about the times that I wanted to trade. Maybe you're in Europe, so you're going to trade the European Open to 11:30 in the US. Maybe you're up early, right? And you want to trade from, 7 to 11. All that flexibility, once I start making those changes here, I'm going to end up affecting the results. But
Yeah,
these are all
that's a
just,
good. Sorry,
oh,
Sean.
pardon me,
That's
Erwin,
a
go
good
ahead.
point. That's a good point you make, because any change you make here, whether it's in the logic or in the ATM, you immediately see the results in the equity curve and in your statistics, right? So you get instant feedback on what you are doing produces a better or a worse result, and that's
Good
very
point.
powerful. Yeah.
Yeah, so I can see this result here. Now, if I'm working here, so for example, let's say I did that and I wanted to take out the end of the day. I mean, a lot of people will only trade here, just here, we'll just do this on the fly. They'll only trade to 11 o'clock, right? So they might do, we're going to have data is released in this window. And I can see, oh, wow, look at that real-time result. I mean, what a dramatic change just by chance. So, oh, okay, well, I'm going the wrong direction there. Let's go back to RTH. Okay. Oh, much better result. So do you see the immediacy of that feedback? I think is the point that Erwin's wanted me to make there. It's immediate feedback because I would open this up and go, okay, well, I'm not trading between 12 and 1. Right? I'm definitely not. Is my result better? No, it's not. Amazingly, it's not. And so this kind of demonstrating intuitively, you might think, okay, well, I'm not trading in the noon hour, but I'm not getting as good a result, right? So it might make you rethink that. And I'm not saying don't. It's just I think the point here is to demonstrate the flexibility and the immediacy of that feedback. I don't know of any other product that gives you that immediate feedback. Now, if I put that back into RTH and we get that nice result here, well, now I've got a couple of the choices here. I can always go, if I felt like this needed to be any further optimized, I could. I don't know why you would want to mess with something that's good, but I could if I wanted to. I could go into the optimizer and say, okay, well, look at all the choices and the detail. Now, again, we're not going to go through everything here. We've got a number of videos up on our YouTube channel that will get into more detail here, but I've got a tremendous amount of control over what I'm allowing this algo to do and how much I want to refine it with regards to the optimization. Additionally, same thing over here, and this is relatively new for, I think this has been maybe 6 or 7 weeks that Erwin added in the optimization for the indicators. Again, careful here, right? And you want to be thoughtful about what you're doing and the ranges you're giving it. But if I wanted to enable all of these and optimize and get that result, I could. Right, pretty
Yeah,
powerful.
that's the power indeed. I mean, you can see that any change you made is immediately reflected in the equity curve and the statistics. But the optimizer can also just find the most optimal values for both the ATM, so for your stop loss or your target, but also the trading hours and also for the indicators, indeed, the settings for the indicator. So yeah, you have a lot of flexibility there.
All of these are available to you when you're working through your list. Now, this is just the default, but I might come in here and say, okay, well, I'm on an algo that's got a profit factor of 50. Pardon me, of a win rate of 50. I want a profit factor of 1.5. Right? That's what I'm after. Okay. And then I want a max drawdown of 500. And I want to optimize for a K ratio, meaning I want a smooth line from left to right. Well, I don't know how it could get much smoother than that, but maybe it could, right? So that's what you'd be exploring if I started the optimization. I won't do that here because it would take a few minutes here and we won't make you sit through that. But these are important choices that you have down here. It's natural to go to net profit, but think about it, right? You might want to do, what's my drawdown percentage? What's the Sharpe ratio? Daily net profit. I want you to optimize for daily net profit. I mean, the amount of control you have here is amazing. Win rate. You might want to do that, although that's not as important. People get caught up on win rate. If I've got, things that I look for immediately, or what's my average win to my average loser? right? So I know what my math is going to look like if that looks good. And then I look at the maximum drawdown, right? Can I sustain this? Well, if you look at here, if I
Yep.
let me
And one
get
of the
rid of
things you mentioned is that we should be careful for over optimizing
yep.
the algo, because over optimizing or curve fitting an algo is one of the main things which can cause your algo not to perform as good in live. But the optimizer therefore also contains a walk forward test. And shall I share my screen because I can show
Yeah,
a
why don't you
simple.
do that? Because you've got one that's live that's just been run with the walk forward, and the walk forward is really an important piece of this. So let's see now.
Exactly.
Can you do I have to share it or can you do it?
No, I can probably share my screen and
Okay, you go ahead and take it then.
yeah, just to show it, and then we go back to you again.
Okay.
So here I have the result of the optimizer, and you can see it produced a nice result, and it also shows you the top 10 or whatever results, so you can click between them, see what fits you best. But the important thing is here the purple part, because the optimizer did run and optimize the algo for the first, in this case, 60% of all available data. And that's the green part. And then it continued trading forward, so walking forward, and that's the purple part. And then you can see how your algo performs on data which was not used for optimizing. And that's very important because you want to see something like this. You want to see the equity curves going from left to right, and not that the purple part immediately drops back to zero or negative, because then it means that your algo is really over optimized. So this is what you would like to see in a optimized algo, that the walk forward test is just continuing the same as the optimized part.
Yeah.
That gives you a clue that your algo is not really over optimized. Yep.
Yeah, that's a really a good point to make. It's that purple section where you're going to get the loud and clear whether or not you've over optimized it. You
Yeah.
might just out of curiosity pop over while you've got your screen up, looking at this. Go over to the report section. I'm just curious what that looks like because I think you have RTH only there,
Yeah.
and see
This
what
is
this looks like.
RTH only. Yeah.
Right. So you see there's no glaring example of a block of time that's a negative. Okay, so
No.
the 10 o'clock is a negative, right? So often we have data released at 10.
Yeah.
So you may or may not. Maybe you look at that and you say, okay, all right, for the next week, I'm not going to trade the 10 o'clock hour. Right? I mean, what's going to happen is your results are going to improve if you take out the 10 o'clock hour, but you're going to in the result, you're going to lose the walk forward bit, right? Because now
Yeah.
you've tweaked it.
Yeah. Exactly. Yeah. Then you would leave out the 10 o'clock in your ATM and optimize it again, and then don't optimize for trading hours.
Yeah, that's something I often do. I will just start with RTH because I'm always looking. I mean, it's actually most of students of the market will know that the majority of the move in the stock indexes happens outside of the RTH hours.
Yep.
So that's a mixed blessing, right? It's if you're in Europe, that's good news for you. If you're not trading in those hours, okay, well that if you're in the US, I tend to always start with can I get my algo profitable in RTH hours? And then if I want to expand those hours because I'm going to be available to be in front of my machine, or I'm comfortable letting it run unattended, which some will be, some won't. Maybe in a prop account, you're less averse to that idea than in a live, real money account. But in a prop account, maybe you let it run overnight. It's up to it would depend on the prop account's rules, et cetera. But those are all just individual decisions. I think the piece that I'd like to emphasize with ASP is that it's so individually oriented. You can create anything that you want to see, within reason. And we're just scratching the surface of this. I mean, we can get into footprint indicators. We can get into all sorts of very sophisticated components to create an algo that's uniquely yours and nobody else can replicate. That's, I think, one of the big draws to it is that it's so individually oriented to creating something that's uniquely yours. What we do in these demos like this is we just show you that it doesn't need to be complicated to be profitable. Remember, indicators are just math, right? And this is software is just processing the math. So, I always say indicators are never wrong. They're never wrong. They can't be wrong. It's just math, right? But now our interpretation of them is what makes it challenging. But if you're looking at a stochastics, right, the range is either increasing or it's not. Right? It's not like, oh, it didn't show me the actual reality of the market. But that I'm not saying that makes it any easier. Just know that what you're looking at here is just math. It's just the math of indicators. Now, when you get into something a little bit more specific to a price action oriented event, well, that's going to be based on what you're looking for and your experience with price action. So it might be that you like to look for, 10 strength 10 bars on either side of a pivot to create a fractal. Maybe that's your priority. I want to look for something that's overbought after a 10 bar swing high. We've got people using 5 bars, Renko charts, just a wide variety. And that source for somebody who was either trialing or getting started with this, our Discord is a great place to come because you're going to see all sorts of different approaches to building algos. Some very simple, some we've seen some with well over 100 conditions,
Oh yeah.
over 100, and grouped together. So it can be incredibly specific. It's just, again, I come back to it's totally uniquely something that's available to you to either spend that kind of time and energy on, or just work with something simple like a Stoke getting below 20 and the moving average is aligning, and voila. What you, it seems hard to believe anybody would say, well, that's not good enough. You doing that manually trading? Maybe you are. I'm not saying you're not. I'm just saying, boy, for the diversification, I mean, this is how I use it. I will let it run, and then I'll have another account I'm manually trading because I don't want to give that up. But I like to, for the diversification here, I might have this running on micros. Let's touch on that a little bit as well, because one of the key features that I've run into with this, and Erwin had to set me straight on this. Be sure we want to include fees and a bit of slippage because the entries in Algo Studio Pro, when you're looking at this, you're always going to be entering at the close of the bar, right? So you want to allow for at least a tick of slippage, and we want to factor in fees. We don't want to be misleading about a result and not have the cost of doing business to be included. Well, be sure you've got the accurate numbers in there because I had some where the numbers were not accurate, and I was kind of getting frustrated by that. So if you're trading the micros, your round term fees, whether you're prop firm or with Ninja or whomever you're with, are going to be much lower than if you're trading the full sized mini, like an ES, right? I think it's almost more than twice the price to trade an ES versus an MES. So keep that in mind and make that adjustment. So for example, if you wanted to see, let's see, let me get mine up here and then we'll switch back here. This where you would do this. Let's see. How do I switch back? Share my screen. I think that works. Screen 2. Share.
Not yet.
Hang on. Takes me a minute to figure it out. Why is it not showing my screen? Oh, I see it. Erwin's screen. Oh shit, maybe I don't have it.
There it is. I can see it.
Now you have this?
Yep.
Okay, good. All right, sorry. I lost it, but okay, so in here in the settings, right? So let's just quickly go this again. Many of you have seen this through the videos, but just to review quickly, what first thing you're going to do when you load it, you've got to create the algo, right? So when I'm putting this in here, this is one I've already created. This is what you see right here. This is an EMA with a 2050 Stoke pullback. Right. So just, that's what we called it. I've got a $25,000 account here. The back testable commission rate here for an MNQ. We used Apex, right? Because that's someone many of our traders are working with. So $1.02, right? Back test slippage is a tick, right? So we're unlike in Ninja's back tester in strategy analyzer where they don't allow you to include slippage commission. I can include that here. So I get a realistic result. in Algo Studio Pro here. Now, most of this down here this is all just a function of what you want to see on the screen. All of the creation is happening in Algo Studio Pro where you're building and then you're looking at those results. But I just thought I would show you that to be sure you've got that accurately entered, so you get good data in your result that includes fees, right, and some slippage, and you can dig beyond that. So, let's see now if I hang on, where'd my Algo Studio Pro go here? Hang on. Oh, hang on. Let's get
While
it.
that is loading, Sam, one of the things we changed also or added in this version is the ability to use higher time frame algos. So you can
Oh,
now also, for example, use the daily time frame. But then if you go to the indicator settings, it doesn't really make sense to backtest every tick. So you can change it to say, well, I want to backtest every minute or every second, because on a daily time frame, that's more than enough accuracy. And it makes the backtesting very, very fast. So
okay. That's
for
good to
those
know. I
looking
didn't know
to
we were
for
doing
those looking
daily.
to create like swing strategies, yeah, that's possible now.
Well, and that's a good point that we get so hyper analyzed or focused, I should say, on day trading. You certainly could use this for swing trading, right? Now, okay, you're not can't do that with your prop account, your day trading prop account. But for those of you that still trade your actual account, that's certainly an option for you to go out to a 64-hour daily, whatever the case may be. Most of the videos that we've done have all been focused on being in and out, in the day on the day. So true day trading, but that we're not limited to that. It just tends to be where most of the market is. So that's why we've featured that. We'll likely do some updated videos here working on 60-minute and higher to demonstrate that. Again, maybe you're doing that with your prop account, maybe not, but that certainly is an option. I don't want you to think it always has to be a 1 minute or a 10 range or something tiny like that. Just they lend themselves well to the environment, and with so many people trading prop accounts, that's why you've seen that emphasis there. Any other new features we want to talk about here? Why we've got this up here? Let's just, for those that haven't seen it before. So we look at the reports here. This is always the first place I go. Okay, do I have a big hole in it? And then I want to look at, okay, how about days of the week? Well, it doesn't do very well on Monday. Maybe I'd take Mondays off.
It
Do I want to look
still
at,
makes profit.
yeah, it's still profitable. How
Yeah.
about days of the month? Okay, unusual, right? So what you got your weekends in here, but okay, consistent. That's what I want to see. And then now Monte Carlo is another important feature, so we can see how does this do. Now, most of you, if you're not aware, I'm assuming many of you would have an awareness of this. What Monte Carlo is doing is just randomizing the order of the trades. So you can see, well, if I took them in random order, do I still get a nice tight trend here? I don't want big swings of volatility because I'm randomizing the order of the trades. I want just what I'm seeing here, nice and tight. So best case, worst case, tight enough to where I would look at this and go, yeah, I'd be comfortable trading that. Risk of ruin is zero. This is with a $10,000 account. So that's a great starting point to get an algo working. And again, it's so incredibly simple. Your choice as to whether or not you want to continue to optimize and continue to optimize. Probably once a week, every 10 days, you might double check that, see if you can improve the result. Or if you've had a string of losers, is there something specific or an additional filter you might put into it? These are all choices. Again, that's part of what makes it uniquely individual to your application. Let me go ahead and close this one here, and let's get to something for those of you that are trading a bigger account here. This is now most of the stuff that we've done. I go out of my way to try and use just any free indicator, something that's native to Ninja, not necessarily one of ours. Well, this is one of my favorites, and yes, this is one of our indicators. This has always been my go-to algo, right? For whatever reason, it always produces a good result. So this is our trend magic indicator, which is it's not complicated. It's just an ATR band here essentially, but it's color coded to the CCI. So we get the color change from red to blue here when the CCI gets above or below 100, right? Incredibly rudimentary, simple algo. But look at the result. Now, I've tweaked it a little because I went from 24 hours to RTH, so I don't have the walk forward on this, but I wanted to see what, am I going bottom left to top right? And let's just show you this. Again, it's very, very simple. Okay, so the trend magic. I mean, I've got pullbacks and I've got breakouts. I've got two signals. So when you're building an algo, we should probably show this here. Erwin, just your best friend is going to be the data box, right? So I can look here and say, okay, when I'm right here, if I go to my trend magic, I want to look at the signals. Do you see here under trend magic, I've got trend and signal. Okay, well, so if I'm building that algo, when I get trend one, signal one, I want it to take the trade. Now, in that particular case, it's a loser. But when I'm building the algo, that's what I'm going to use. So when I'm over here, okay, I want to see that. Okay, when the trend is a fixed number of one, right? Remember, we looked at it. When it's one, yes, I want that condition to be active. When it's a two, then that's a different result. Okay, I want it to be two. Now, here's an example where you don't want necessarily the mirror image. For equals might be does not equal two. So pay attention, right? So, okay, do I want on the short, do I want it to equal two? No, I want it to equal minus two. Same thing here. Okay, if I've got a signal here that's tied to the current bar, I want the signal here. Do I want the signal? What do I want that to equal? What you're going to follow that over here. When you're going to look at your data box when you're putting together an algo, and you're going to go, okay, I can see how this works. Oh, okay, when it's trend one, signal zero, okay, no trade. When it's minus one, yes, take the trade. Or maybe one's a breakout, one's a pullback. And then I just added into this is something that, again, an example of something you might go, well, let's just see how it is if it's above or below the VWAP for the day. Oh, okay. Well, now I could do a little testing. Let's see. Let me close that. So I could, I think while that's running, I could take that out and see what the result looks like if I don't include that, or if I do include it. What if I wanted to go to an exit template and say, okay, I wanted out after X% of gain, or I just wanted to reverse if I get an opposing signal. Now, this one's currently running without an exit template, but that's certainly an option that you create your own exit conditions. In this example here, we're just letting the ATM stop take you out of the trade. So it's working with a 14 tick stop on the ES, which, pretty tight to get that kind of result, right? Now I think that's 20 days. Oh, I think it was 20 days. And so out of those 2011 where we had the condition where we had the trade, pretty good result. You might say that I'm not here to say this is an algo that you should be trading right now. I'm here to say this is a simple algo you can build yourself. Now, maybe you want to add some more filters. Maybe you want to take out the VWAP. Maybe you don't like CCI. Maybe you're going to use an RSI or a Stoke, but it's up to you what you're going to use. But what I want to see is a relatively smooth line from bottom left to top right. And now look here. This is something that I always go. It's the first place I look. Average win to average loser. Right, I want to see at least 2 to 1 there, because look at my win rate. It's not even 30%. I don't need it to be 85% to be profitable. I do not, as long as I've got that ratio. The other thing I don't want is I don't want a shitload of trades every day. It's individual, right? I want 4 or 5 maybe at the most a day. I don't like in out, right? The fees are going up. It's likely you're in chop if you're going sideways. And you can just look at the indicator here. We're just going sideways in this chop, and in the middle of that chop, look at the time of the day. We're coming up to the lunch hour. Loser, loser, loser. We go into the end of the day. Big winner. Now you might look at that and say, oh, okay, well, on that particular day, but is that a pattern that rolls through many a day? Right? If I go back, right, this is just the kind of thing you would do, or you go back and say, okay, in that part of the day, in the middle section of the day, which is not news to anyone, it's chop. Look at the early part of the day and the end of the day. That's where the winners are. That's where the big volatility is. That's not news to anyone. Do I want it trading? Look at this. Loser, 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 loser. Middle part of the day. Maybe I don't want to trade those. The other thing is you don't have to turn it on and leave it on. You can turn it off, turn it on based on the market conditions. Maybe it's up here. Do I, as I'm approaching the IB at the end of the day, do I want to leave longs on? Maybe yes, maybe no. When I'm down here, after this massive move, do I want to leave shorts on? Maybe yes, maybe no. Right? Again, that's why no 2 people will ever have the same result. I know they wouldn't with me, because I'd be turning off shorts down here. Now, you can say, well, yeah, hindsight. but I mean, that kind of a move, oh, okay, I'm certainly going to be looking left to say, okay, am I anticipating they're going after this low? Maybe yes, maybe not. Maybe at that kind of a move, you say, okay, I'm going to turn off shorts. As we approach the IB high, maybe I want to turn off longs. Maybe yes, maybe no. All right, here's an example. Well, that's news-based, right? We just blew right through it. Most days, there's always a pivot there. Well, there was a pivot there. Actually, you can see it. Okay, let's see. So we've covered ES one. This is one just to, oh, let's see if I use this as an example. Because I did this in a video here. Let me close that one. One of the things we've all seen this. You go to YouTube and you type in, day trading indicators or combo. I mean, there'd be 20 million different videos that would come up that would show you, okay, this combo, use this RSI, this Stoke, this super trend here, it's 99% win rate. Well, first, you can look at that and go, don't we all look at that and go, oh, come on, that's bullshit, right? It's just natural reaction to be skeptical of that. But you can be objective about how you react to that and say, really, 90% win rate. Let's go check that. And that's all I did here. I took this right off of a YouTube. If you look on our YouTube site, I went through the example. I showed the video. Oh, okay. Well, if the MACD is above 0 and the CCI is doing this and you're above or below an EMA, take the trade or you're going to have a 90% win rate. Well, okay. So I recreated that here and on a 1 minute MNQ over 14 trading days. Well, it wasn't exactly a 99% win rate, but it's profitable. Again, right off of YouTube. No custom indicators, just the usual, right? As they typically will do. It's just they're going to show you, right? So the basic EMA, CCI, and a MACD. Boom, right? Okay, is that the world's greatest result? No, but that's certainly a good starting point. And additionally, you can say, okay, well, you can be skeptical of every one of those things, and you might get an idea. Maybe you get one that's like, God, this thing has got great numbers. But you don't have to guess, or you don't have to go, well, let me test it in demo for a month. You can find out, in a few minutes. Pretty powerful. Let's see, anything else I would have here? Oh, let's see. Let's go to this one here. Just to show you how easy this was, right? All I did was just go right through the video. Oh, close the greater than the EMA. The MACD difference is above 0. The CCI is above 100 or below 100. That is drop dead simple. Couldn't be any simpler, right? Just a basic indicator algo. Well, what made it profitable? Well, I went into the optimizer and said, okay, well, I think here I took out the 10 o'clock hour. So that's why I don't have the purple walk forward, because I tweaked it a little bit, because I'm sure I went to reports, looked at it, and 10 o'clock was a big negative. It was, right? So I could take out 10:30 and 2 o'clock. Well, if I do that, if I take out 10:30 and 2 o'clock, well, my result's going to get better, but that's just over the last 14 days. I push that off here. You can see that here. Okay. Well, now I'm at 423. Well, okay, so for the last 14 days, those two 1 hour windows were not profitable. That may not be the case going forward. It's just over the last 14 days. So thus, don't lean so heavily into your most recent optimization, particularly if you're optimizing time, or you're taking out time based on your report window. Double check it every so often. Is that holding true? Now you see I've got no profitable hours of the day. It's profitable every time it's on. And when I'm taking those hours out, you see what happens? I get the grayed out section here, so it's not going to trade during that, and I get a better.
And one thing to note, Sam, because people might think and say, well, all this trouble for $400, right? But this is MNQ on one contract. Of course, you can scale it up. You can trade it on the NQ itself, or use multiple contracts.
Multiple contracts.
Yeah,
I could do
exactly.
I could do a 4-lot scalp and 2-lot runner, right? And then re-optimize. Now look
exactly.
in real time. Just having done that in real time, I went to a 4-lot scalp and a 2-lot runner, 1487.
Yeah.
But you see that happen instantaneously. Now look at my win rate, 50%. Now it gets a little more interesting, right? Now my cost went up. Right, fees went up because I'm trading more. I'm now at 700 commission, but now my average win, average loser, it's tightened, but my net result is good. So there's always a little bit of a trade-off here. But I had almost 6-to-1 win rate here. Now it's not even 2-to-1. But look at the difference, right? What changed? I went from less than 30% to 50% here. So I can accommodate that. I can handle this. It's that instant feedback that makes you go, oh, wow. Okay, good. Okay, well, do I want to put in, what if I go back to this and I go back to RTH. What's my, I'm going to get an immediate result. Oh, look at that difference. Right. So I just went from 1400 to 378 just by changing the hours. Point being, not this, the point being the immediacy of that feedback. That's the power of ASP, right? I mean, then just getting creative. Now, this is unoptimized. So I might come to here and say, okay, well, I want to optimize both positions. Or the other factor I could do, I say, okay, leave the runners. I'm going to set the runner where I'm going to want it to trail and stop. But I want you to optimize my scalps because I've got a 4 lot going into the scalp. So optimize the scalps. Or I could say optimize both of them. I highlight that. Now optimize both of them. And I want you to not optimize the indicators, but just optimize the ATM. Maybe I don't want to use a stop. Maybe instead of a stop, I'm going to say at opposing signal, reverse the trade. Right. And then run optimization and see what you get. Right. Again, now we're tweaking, right? Who knows what we're going to get here? But the point being is it's so fast. It's so fast. Now you run an optimization on 90 days of data when you're optimizing 7 indicators. Well, go have a cup of coffee and maybe walk around the block. It's going to take a little time for that kind of optimization because it's optimizing in great detail, right? It's only reasonable to anticipate that that's going to take a little bit of time. If we go to optimize this and we say, okay, optimize, I've got 12 indicators here and I'm doing, from one tick to the next tick to the next tick. Well, you don't have to do that. I could say, do my steps here for an indicator. Maybe I'm using an EMA. Well, let's do three-point steps here. So I'm going 10, 13, 16, as opposed to 5, 6, 7, 8, 9, 10. Do you follow me? They're on steps. Same thing with the MACD. Maybe I want to do these steps in increments of 2 or 3 or 4 or 5, especially if I'm working on a larger time frame. I don't have to be doing, 4, 5, 6, 7, right? It's going to speed up that optimization price. Very rarely would I ever run an optimization with all of this set, right? I just wouldn't. I'd come in here and go, well, shit, do I really want to have it targeting 4 to 100 ticks? A risk reward of 0.5 to 10? That's a little wide for me. I would start tweaking here. Tweak based on your natural preferences or what has worked for you in the past and see how it does. Build an indicator based on how you approach the market, right? If you're using indicators or price action, see how it does. See how you manually trading it compares to an algo trading it, right? And then look at the hours, look at the optimization. Do I want to, if I'm using a 9-period CCI, okay, is that the right number? Right? And then the immediate feedback is the kicker. Right. So I don't have to wait and wait and wait and wait. So if I make a little change, I get that immediate feedback. Oh, wrong direction. Let's go back the other direction. Oh, let's see. Do I have anything else here? I think we probably covered everything that's relative to the latest version. I will say this has been through we're Rev 6, I think, right now, and continually adding through beta, and we bounce it back and forth with the customers and members to get their feedback. And much of the features that have been built in have been by request from our user base. So we're very available. If you have a good idea, something that can be built into ASP, we will certainly look at whether or not we can do that to accommodate.
Yeah, a good example was today actually from one of our members who wanted to scale into trades, either losing or winning trades, and we already current version already allows you to do that, but he wanted to create rules for when to scale in and when to scale out. So that's an excellent suggestion and definitely something we will probably add in a future release. But that just shows that most of the features we are adding is based on customer feedback.
Okay. I'm going to have to type this up here because I didn't produce a special slide. So I'm going to find my text. Okay, give me 1 second here. ASP 25. Okay, we are going to
make it bigger.
Yeah, give me a second. Oh shit, here 14. Okay, so let's make this. Hang on. All right, behind the scenes. Okay, so Erwin, we want to make this. we're getting very close to the holiday, the Thanksgiving holiday, and we will certainly be doing a Black Friday sale. We want to make this available immediately for those that have taken the time to watch this little recorded webinar.
Yeah.
Okay, so for what do we want to make it good for? The next 4 or 5 days?
Yeah, at least. Yeah, let's say until no, probably until the 29th, because then our Black Friday sale starts.
Yeah, yeah. So you can get a head start. If you just have seen this and you're very excited and want to, reminder, all of our indicators are available for a trial. This is not an insignificant investment to make into ASP, right? It just means you're serious about your trading. But before you make that kind of investment, trial it, work with it, come into the Discord, look at some of the algos that are in there, do some experimentation. Just as I suggested, go to YouTube and find a few 99% winners, never lose again setups and test them. Test them for yourself. I promise you, you'll learn something in that process and you'll get more fluent in using ASP so you can move quickly with it. I mean, Erwin and I, we can create an indicator, an algo in, minutes because we've been doing it for so long. And just like anything, the more you work with it, the easier it's going to be to create something, change something, add something, filter something, do some experimentation. I mean, one of the things we didn't really talk about here is you can look here. I can do things on one shot or continuous, right? It's going to change my result. Do I want it to continually be looking to a trade, right? So I've just changed that. Look at the result because all I did was go from continuous to one shot. If I go back to continuous, as in if the conditions are still present, take the trade. I could do this. I could do I want at least 3 of these to be present. Take the trade. Not,
Yeah, and the good thing, Sam, is that when people go to the website and to the product page, maybe you can show that there's a lot of videos on there which you created, and all those tutorial videos are very short, and they just explain one feature of ASP, so that if you ever wonder what is this do not extend do, then there's a video for it, and you can.
good point, right? And we made a we went through every one of these features so short because you're not anyone watching this, you're not going to remember this, right? You're going to, oh shit, how did he do that thing? Right. So we've got all of that laid out in terms of, this is a good example. Do I want to extend these signals for maybe 3 bars? What's that? What's the difference that's going to make? So do I want to extend all of them for 3 bars? Maybe I do. 2 bars. Difference, right? Again, you get the immediate result. Is that better or worse, right? So the idea being, oh, okay, well, if the conditions are here and I've got the in this case the CCI is below 100 here, but if it comes out too quickly, do I want to extend that condition over 2 or 3 bars? So even if it's not in the exact same bar where it's there, if it's 2 or 3 bars later, then yes, still take the trade. Again, I come back to it's totally unique to the individual, how you set that up and how you played with it, tweak it. So, okay, I think that probably gets us enough here. We've got this little code, ASP25, will get you 25% off your purchase price for the next, I guess we'll make it Thursday to Thursday, next 7 days.
Yep.
And I'll send out an email for this as well. I'll have that little note there so you don't have to worry about it. But ASP25 will get for those of you that have sat through this much of a webinar with us. Hopefully that gives you a little bit of an incentive. But again, I would encourage you trial it first, then make the investment. Okay, Erwin, anything else you want to add?
No, I think you covered it all.
Okay, good deal. Okay, guys, thanks so much to all of you for joining us. This will be up on the website here very shortly. So thanks again, and be sure to join. If you're interested in this, get in our Discord, right? Because that's the best way to communicate with us, and we're all readily available. And we have a support team, so we're there to help you get the best result possible. With that, I'll wish you guys good trading, and we'll catch you on the next time.